Hi everyone and welcome to a new video. In this video, I'm going to share with you a high dividend yield stock that is down more than 17% since last year. But before that, I want to clarify that I am not a financial advisor and this is not investment advice, of course. The stock I am talking about is none other than the Kraft Heinz Company, ticker symbol KHC. The Kraft Heinz Company, together with its subsidiaries, manufactures and markets food and beverage products in North America and internationally. Its products include condiments and sauces, cheese and dairy products, meals, meats, refreshment beverages, coffee, and other grocery products under the Kraft, Oscar Mayer, Heinz, Philadelphia, Lunchables, Velveeta, Ore-Ida, Maxwell House, Kool-Aid, Cello, ABC, Master, Quero, Golden Circle, Wattis, Pudlitsky, and Plasmon brands. It sells its products through its own sales organizations, as well as through independent brokers, agents, and distributors to chain, wholesale, cooperative, and independent grocery accounts, convenience, value, club stores, pharmacies, and drugstores, mass merchants, food service distributors, institutions, including hotels, restaurants, bakeries, hospitals, healthcare facilities, government agencies, and various e-commerce platforms and retailers. The company was formerly known as H.J. Heinz Holding Corporation and changed its name to the Kraft Heinz Company in July 2015. The company was founded in 1869 and is based in Pittsburgh, Pennsylvania. Their industry is packaged foods, while their sector is consumer staples, of course. The Kraft Heinz Company has a market cap of $36 billion approximately. It is a massive company. Their current P ratio is 13.38, which is good for their sector and better than most of their competitors. Their forward P ratio is even lower. It is 11.26. This means that they are expecting their earnings to grow. Looking into their financials and into their income statement specifically, it is obvious that the revenue is stagnant. In 2024, the revenue fell almost 3%, but even in the previous years, the growth was almost non existent. This is not a great sign. I personally prefer investing into growing companies, unless, of course, I see a stock that is extremely undervalued. As for their basic shares outstanding and the diluted shares outstanding, I don't see a big commitment in buying back shares. From 2020 until today, the total shares outstanding are almost the same. Now that the share price fell so much, there is a strong possibility that they might do an opportunistic buyback, bigger than the last one. So, even bigger than the last one. So, I'll definitely keep an eye on it. Their basic earnings per share were 2.27, while their diluted earnings per share were 2.26. For 3 consecutive years, their EPS grew substantially. This wasn't the case for 2024 though. Their EPS fell, not by a significant amount, but it still fell. Hopefully, this was a one time thing. Looking into their balance sheet, I see that they have a very strong cash position. Their cash and short term investments are $1.33 billion. That's a lot of cash for a company of this size. This cash makes the shareholders feel more safe about the dividends, while also giving the company the opportunity to invest back into the business without needing to borrow money. They can also use this money to pay off some of their debt. Their total debt currently is $20.45 billion. This is a big amount. The good thing though is that their debt is consistently getting smaller. Their net cash debt is minus $19.1 billion approximately. In my opinion, this debt is manageable, but I will definitely keep watching it. I want to see it getting smaller because, as you saw earlier, the revenue isn't growing. KHC has a high dividend yield at the moment, 5.29%, which is great. For every single KHC share you own, you will get paid $1.60 annually, so 40 cents every single quarter. Not too shabby. Their current buyback yield is 1.62%, which is not bad. We will have to see if they'll be consistent with buying back shares. This makes the current shareholder yield 6.91%. As for their payout ratio, it currently is just below 71%. This is a red flag, but it could be worse. I prefer payout ratios below 60%. KHC doesn't grow its dividend, and I don't think they will anytime soon. If they did, I think it would be a very bad decision. The decisions they are making now could lead to a dividend raise in the future, but not in the next couple of years. Analyst consensus for KHC stock is hold, and their 12-month forecast for the share price has a low estimate of $28, an average estimate of $31.40, a median estimate of $31, and a high estimate of $41. This shows that they are not very confident about the share price performance during the next 12 months. Now, as for me, I used to own a few Kraft Heinz shares in the past, but the share price performance was awful. I was lucky and still managed to sell them for a tiny profit. I am open to adding this stock in my portfolio again, but not at the current price. I want to see commitment on paying off their debt and commitment with buying back shares. My target is $25 if their financials are fine, of course, but I wouldn't buy a lot of shares. The dividend yield is tempting, but I am focused on total returns. I have a very small portfolio, so there is no reason to focus on dividends. I will focus more on dividends when I'm about to retire. Tell me in the comments below what is your opinion about KHC stock. Do you maybe already own it? Also, let me know how is your investing journey going so far. Subscribe and turn the notifications on so you can see more videos like this one. Thanks for watching and have a nice day.